look at companies that are quite popular in the news, maybe making some headlines. That's what we do most of the time. But today we're actually going to do something that's a little bit different. We're going to look at a company that we've actually been considering here at our firm. And with everything going on in the world with Russia, Ukraine, the stock market, it's been very volatile. So that's when we start to sit down and say, hey, there's probably some good opportunities out there. And we've kind of scoured a couple different industries, and this is one that I'm pretty excited about. I know we haven't finished the research yet, but I think there's a great opportunity here.
The excitement comes in different forms. I mean, once we start showing this company, their products, where their stock price was, what it is now, it's not some like going to be the next, biggest thing in the chip world or whatever. But I think it is an exciting company when you look at it as a business. And that's what we do is we invest in businesses. I think this is an exciting company at perhaps an exciting time. So excitement, as I said, comes in different forms. And I think this is pretty exciting.
Yeah, and we're going to do something a little different today too. We're actually going to break out a research piece that we normally don't cover, and going to give it away here now. The company we're looking at is 3M, and this is a business that not a hot new company that just came out yesterday. It's been around for a long, long time. Has a lot of good aspects to it, and we'll get to the numbers a little bit later. But very important, when we look at buying businesses, it's not just the research that we show you here on the Smart Investing Weekly Stock Analysis or a radio show and podcast. There's a lot more that goes into it. It includes reading through the 10Q, 10K, listening to conference calls, looking at these earnings presentations. And this is what we're looking at right now is the recent earnings presentation from the recent quarter of 3M's results. And one thing we always talk about is where is their business coming from? We want to understand that when buying a business. Now you can actually see how we're going to break that down and what we're going to look at here to see how diverse the company is.
I defy anyone to kind of look at what this company does and say they've never used or don't use their products, because they're in everything. We see they're in automotive. We see they're in electrical materials. They're in personal safety. They're in electronics. I mean, there's food safety, drug delivery. I mean, this company has its hands in everything. So it's something that we always like when you own the company, that you actually participate in that company. I think everybody uses something somewhere along the line from 3M.
Have you ever used a Post-it note?
Good point. Use them all the time.
They got that there. And then I actually used one of their products this Christmas when I was hanging Christmas lights. They have the adhesive that you just stick on, and it's a little hook, and I hooked my Christmas lights around it. I mean, it's just simple little products like that. As you said, very diverse. Now, one thing that we looked at here with it that I'm going to say is a little bit concerning is if you look at Q4 2020 to Q4 2021, there's some areas that we want to look at a little bit closer. And in particular, we were looking at, like personal safety. We know that they were a benefactor from the masks. Is that why that's down close to $200 million? That's a pretty big hit in that industry. That's close to 20%.
So we always talk about, like, you've got to understand the business, what's going on in the business. We know that they're selling less masks now, but there could be something else that comes up, 6 months, 12 months from now, that's going to change what they're doing. So that's what's nice about this company, is they kind of are flexible. They kind of move with what's going on in the industries and how things change. They were I believe, one of the biggest mask makers out there, but things are changing. What's going to happen in Ford? I don't know, but I think 3M will be there.
Yeah, and that's a nice thing about a diverse business. I will say sometimes it makes me a little nervous being too diverse, because you kind of lose focus. We saw this with GE years ago, where they had their hand in so many different things, and then they started spinning things out. I will say when GE had that problem, the numbers looked pretty atrocious. So it wasn't very exciting. We're going to get into the numbers for 3M. Diversity in this type of business, it's a benefit, but it can also be a pitfall that you have to keep a close eye on, that costs aren't getting out of control. What I mean by that is you could be, 3M, let's say, is really focusing on the transportation and electronics business, and that's running very smoothly, but all of a sudden they lose focus on the consumer business group, and it's like, oh my gosh, costs are getting out of control there. That's one downside about a conglomerate, is you're not as hyper focused on one particular area.
And actually, bring up GE. I mean, they have a little different situation. I mean, they had very big in areas because they had healthcare, which really hurt them on the long-term care side. They had a situation where they got hurt on the financial side. They try to hit big home runs on different things. I don't believe 3M does it. I think 3M tries to do well on many different factors. So, and these are what they call a conglomerate. So you got to be careful what management is doing with these. Are they trying to hit the home run in just one or two big things? I think that was General Electric's mistake. I don't think 3M's making that mistake. And I like the management also at 3M.
Yeah, and I will say that's one thing that we'll look into before we buy it is what exactly is the future of these products. Are they again swinging for the fences and potentially putting themselves at risk? So there's still a lot more research that we want to do here, but looking a little bit closer, what excited us about it? Let's look at those numbers.
Yes. Yeah. So again, 3M is a symbol, MMM. I guess that's right. They're in the industry, as I said, conglomerates. Not much float short-wise on this, 2%. I am surprised only 68.6% institutional ownership. Looking at their PE ratio right now, it is now 14.7. That's still above the industry at 10.5. A little bit disappointed with that. I was hoping to find something a little bit lower. Price of sales also high, 2.5 versus 0.7. Price to tangible book value, not material versus the industry plus 100. And again, they probably have a lot of goodwill on their balance sheet. And again, this is something else you want to look at. What makes up their balance sheet? What are those intangibles? Could they be written down? Hopefully not, but you got to understand that. And then price of cash flow is 11.7 versus 10.7. Now, look at the PEG ratio, which is price earnings divided by growth. Below the number better. 3M 2.0 versus 28.1 for the industry shows a lot of potential growth for this company, and you're not paying very much for it. We do see their earnings were up 8.1% for the 1 year. Not as good as the industry, up 59.6, but could be some crazy things in there with that. We do see sales are up 9.9%, also not as good as the industry at 34.6. We see a 5-year growth rate. Here's another good long-term factor. 5-year earnings per share growth rate, 7.2, about 3 times the industry at 2.8. I like seeing that. We also do see, and this kind of excites me as well, a nice dividend, a 4% dividend, and they only use 58% of the earnings to pay that out. We also do see a 5-year growth rate on that dividend of just about 5%. So they grow that dividend at a nice pace for you as well. Actually, have done it for 10 years in a row. We do see on the balance sheet, you got a current ratio of 1.7 versus 1.5, shows nice liquidity. Debt to equity, no problem, 1.2, same as the industry. We do see here we have a net profit margin of 16.8, almost 3 times the industry at 6. Return on equity, very good, 39.4, double the industry at 15.1. Even return on capital, which includes the debt, looks pretty good at 19.1. versus 9.2. Let's get excited about what this looks like going forward, because I can't wait to hear the 52 numbers. And actually, I think we can go beyond 52 weeks, don't we, Chase?
Yeah, well, one thing we're going to look at here is the current price for 3M, 148.32. The 52-week high, well, that's $208.95. 52-week low, $139.74. You can see that year-to-date return, it hasn't done that great, as it's down about 15.7%. Which is more than the SP 500, which is down 6.4%. This is kind of what you're talking about. You look at the 5-year return on this company, you see, gosh, down 9.1%. You might be saying, Brent, Chase, what do you guys think? The stock's down over the last 5 years. Exactly. That's what we want to find. We want to find things that aren't in fashion and that could do well over the next 5 years. Again, we always say past performance is no guarantee of future results. We want things that are undervalued and can perform going forward. And I do look here that it looks like about the high came in 2018. It's around $245, it appears. So it's down close to 40% from that high just a few years ago. That's what excites us. There's, I think, some value in this business as we look forward. Speaking of looking forward, what we're going to do here is we're going to go out to December 2023. You see the estimated earnings per share in this case. Well, it's $11.09. So we take our 16.6 multiple for that. We get a target sell price of $184.09. That's substantially above the current price of $148.32. To be exact, it's 24%. Now, I say substantially. I wouldn't be buying it just yet. Just a reminder, our margin of safety, 30%. So this is on our watch list. We're excited about some things, but there's still a lot more research to do here.
And the one or two things have to happen. Either those earnings that we just talked about have to increase the target sell price, or the stock has to pull back a little bit. I want to remind people where we're at right now. we do have some headwinds. We've got the headwinds of inflation. We've got rising interest rates. We've got the war in Ukraine. So we could have these periods where things drop dramatically. And I hate to bring it up, but it's reality. There's talk that what if Russia uses chemical weapons? I think that's going to be a down day, maybe down a few days. That's when you want to step in and buy this company that's on sale. That's what we always look for. Businesses on sale. This one's not quite the fire sale yet, but I'd be watching it closely because it could become a great buy for long-term investors.
And it doesn't have to be that complicated. I mean, we always talk about a good returns, 8, 10, maybe 12% on average per year. That's the nice thing. You get a nice 4% yield with this company. Well, if you can just do 4% on the stock price return over the long run, that's an 8% return. That's not bad. I mean, that's the thing that we're looking for is, again, good value companies. That's how you set yourself up for success in the long term.
And don't forget, Chase, too, that these companies grow their dividends. So in 10 years, you could be getting a 7, 8% yield and the appreciation. Like, wow, we did great with 3M, but you got to buy it on sale, be patient. And most importantly, make sure you understand the business. We're kind of pointing the right direction. We're not saying run out, buy it right now, do your research.
Absolutely. Well, thank you again for joining us here today on the Smart Investing Weekly Stock Analysis. Again, if you did find this video informational, be sure to hit that subscribe button below so you find out about our future videos as well. For more information, you can go to our website, smartinvesting2000.com, listen to podcasts, check out other videos, also find out more about our firm there. Thanks again, and we'll see you here shortly.